2026 is shaping up to be the most consequential year for public markets in over a decade. We are staring at a massive divergence. On one side, we have a historic wave of potential mega IPOs, SpaceX, OpenAI, Databricks, looking to fund civilization-scale infrastructure which has the potential to swell up to $3 trillion. On the other, giants like Stripe and Revolute are staying well private, proving that private markets are now deep enough to sustain multi-billion-dollar companies indefinitely. And of course, to help us decode this great capital divide, we are joined by the very experienced Ramesh Pudhucode, with of course 37 years of experience bridging deep technology with financial insight. There is of course no better guide for this conversation. Ramesh, welcome back to Front Page. A pleasure as always to have you with us. Pleasure to have you with us. Yes, I can hear you loud and clear, and I'm very, very excited to get into the conversation right away. So let's start. First and foremost, how do we first make sense for all of us, Ramesh, and the viewers right now? Please set the context. How do we make sense of this split, first and foremost?
You're talking about the private capital versus the public
Correct. Yes,
market.
yes, yes.
Um, as we know that as we heard about three companies, the three big stars, OpenAI, SpaceX, and Anthropic are planning to go public.
Hmm.
Um, but it is not necessarily for the capital, but I think they want like the branding also because they are already getting a lot of capital from the private markets, especially like OpenAI from Microsoft and all the other companies and even Anthropic. SpaceX,
Hmm.
of course, there is no dearth of capital. They keep raising capital at the private level, but I think it's
Hmm.
more branding and
Okay.
and as you mentioned, I think the private capital depth is also pretty deep nowadays. Like it's pretty wide, diverse and strong across the venture capital, private debt, private equity capital, all those things. It's about 24, $28 trillion now, the private
Yeah,
capital.
I mean, and that's quite interesting, Ramesh. That private capital can sustain multi-billion-dollar companies, as I just mentioned, almost without twitching a muscle.
Absolutely. Sudhi, there are, I was just reading a few days ago, there are about 280 American companies with a market capitalization of $5 billion or more in the
Hmm.
private. In the
Hmm.
private,
Wow.
there is a company called Publix. It's a supermarket in the U.S. They have about
Hmm.
like in the southeast. There's about 1,500 stores here. They are private for the last 70 years, and their revenue is about 50 to 60 billion dollars,
Wow.
and they are worth about 150 or some billion dollars or something. Totally private, employee owned. No, for not
Wonderful.
public.
So,
Yeah.
which means, Ramesh, the way I understood this, as you probably just set the context, that it is also more in terms of the optics, which brings me to this. We call companies like OpenAI and SpaceX civilization scale. We are talking about, global satellites, massive compute, defense technology. So, is this the deciding factor, Ramesh? Do the capital requirements simply exceed what private markets can sustainably provide? Is it purely because of the ecosystem that they are catering to?
I think it could be two things. One is, of course, the tremendous capital needed if they have to go to the infrastructure like the data centers on space down the road, and the
Right.
massive data centers that they are putting around. That could be one reason. The second thing is probably branding too, and the founders and the other investors, initial investors, they want their money back.
Hmm.
Like money
Hmm.
back in the sense their investors might want to make use of that the increase in valuation
Hmm.
per se. So
Hmm.
it could be both the things. I don't think it is entirely due to infrastructure. It could be part of it, but it need not be because the private capital, as I said, is about 24 to 28 trillion dollars. Therefore, it can it can supply a lot of companies with private capital, which doesn't need like Stripe or SpaceX to go public.
Okay.
Yeah.
Okay. Okay. Which brings me to the $1 trillion question then, Ramesh, which is that, as I had mentioned, right, that it aspires to actually swell up to $1 trillion valuation or $1 trillion economy is what they're probably talking about. So SpaceX, OpenAI, Anthropic, Databricks all hit market in this 12 to 18 month window. We are looking at nearly $3 trillion in potential new market cap. So, first point is, how transformative is a cycle that big, Ramesh? Aren't we just talking about tech stocks? How does this reshape ETFs, for example, the indices, and institutional
Yeah.
portfolios globally?
Absolutely, Sudhi, because your S&P 500 might change the indices. Because if you're talking about SpaceX 1.5 trillion or even 1 trillion, if you're talking about 850 to a trillion of OpenAI and about 500 billion of Anthropic, there are a lot of indices that will change. Be it the S&P 500, be it the ETF, BTFs, be it the other indexes. Yeah, it can. It will have a ramification, but that is not the big thing here. The big thing is that it will bring so much capital into the public market. Remember, Sudhi, already US is already 70% of the global equity market. 70%. Therefore,
That's
when
huge.
these go, like even Indian investors, like you see, going to Gift City in Ahmedabad, can invest in OpenAI and in Anthropic and in SpaceX and all these companies. And remember, the all lot of funds will be flowing into these into the market, which like a Gift City in India, you can do it right away, right now, which the government allows it, with the
Right.
least taxation, with no bureaucratic things. For a lot of people, they want to, because remember, we don't have, I'm talking about in the Indian market, there is no AI player right now. Therefore, people are waiting for these type of companies to invest. And
Fair.
I think that is going to be the big factor here, I would say, across the world. I'm talking about the Japanese
Sure.
investor,
Sure.
The Singaporean investor, the Dubai investor, like that.
Fair point. Of course, Ramesh, as we all understand this, and who better to explain it to us than you? Uh, with that kind of scale, there is always a tendency for scrutiny because we are talking about deep tech, right? So, research and development cycles actually needed for deep tech are long gestation periods. So, do you believe the public markets of 2026 are finally mature enough to correctly price these very complex deep tech businesses?
I think there may be some hype. I feel I don't know whether, especially like companies like OpenAI, so high valuation, will they ever? The PE will be so high.
Hmm.
Uh, it will be like the Cisco of 2000, like which is like
Oh, wow.
250, 280. Remember, Nvidia looks high, but actually its PE is not that bad. It's about 26 to 28. It's
Hmm.
not that
Hmm.
bad.
Hmm.
But whereas like Palantir, an AI company, a
Right.
software company, the PEs are almost hitting 250, 270 or something like that.
Hmm.
Therefore, there is a possibility that OpenAI might have a high PE, and I don't know whether it is, will they ever justify that? Like Tesla, for example, is very high PE. It
Hmm.
doesn't. Now people say, okay, it has got these Optimus robots coming and driverless
Right.
and all that stuff. But
Right.
still, the P is almost 300. Is
Wow.
almost 300.
Hmm.
So I feel among the three, I feel the riskiest I feel is the open AI, because
Okay.
Anthropic has got a good enterprise clients. They are very strong at enterprise. They are making money, and they probably make money faster than or earlier than OpenAI.
Hmm.
Um, but OpenAI is more a consumer product. Therefore, I don't know how much how their revenues and operating margins would be with the amount of infrastructure that they are spending. For I feel personally that OpenAI is probably the riskiest of the three, followed by SpaceX. Yeah, that is what I feel.
Interestingly, you just mentioned that, Ramesh. Very quickly, I'll just tell you that we had done a story on OpenAI and how OpenAI is getting into healthcare and the classrooms in a big way to justify their overall sales because of the sheer amount of debt that people like Oracle and SoftBank have also taken, and also themselves, to maybe justify that if they can hit the sales perspective. So yeah, maybe you got a point there. Anyway, now of course let's look at the other side of the coin. Ripple raised $500 million, Ramesh, privately, as you were mentioning, and sits at a $40 billion valuation without touching the public markets at all.
Yes,
So what does this
yes.
tell us about the depth of private capital? I'd like for you to maybe shed light on it. I know already you have mentioned it, that it is a very robust ecosystem. But is liquidity, sorry, a new strategic tool that we can toggle rather than probably a necessity? Is that what it's signaling to?
Yes, but I think, see, Ripple is a fintech company, and the evaluation is 40 billion. Like Stripe is even higher,
Hmm.
but their requirements of liquidation, they don't have to go public, in my opinion, because they
Hmm.
don't need the same amount of capital, like let's say SpaceX, for example.
Hmm.
Um, because there is no really hard infrastructure that Ripple or Stripe, that makes them to go really public. Therefore, but still their valuations is astronomical. Ripple and
Hmm.
Stripe is
Hmm.
even more,
Hmm.
and therefore, yeah, I think the liquidity is a factor for the big companies like SpaceX and all that, because they need a lot of capital. Second, the existing employees of SpaceX for the last 10, 15 years
Hmm.
and the initial investors, they may want to, get back their returns. Therefore, you can go into the second. Oh, by the way, they
Hmm. Hmm.
don't. All these companies don't have to go to the primary market. They can still go into the secondary market and have liquidity.
Sure.
That
Sure.
means basically the employees can still sell the shares
Hmm.
and make and trade it just like public supermarket does, and all these in the secondary market.
Hmm.
Even Ripple also. Okay, for no, not necessarily they have to go for IPO. The only reason I feel they go for IPO is for brand value. If they are expanding across countries,
Right.
because then you have a brand. Let's say someone wants Ripple wants to go into India and South Asia
Sure.
or Europe. Therefore, IPO will lead to a brand value which will make them to go rather than the necessity to raise capital, I feel.
Very valid point. Of course, now if we were to kind of move towards the conclusion of the discussion, Ramesh, I have to say this, that do you believe that this isn't just a United States story anymore? We are actually seeing IPO candidates from everywhere. Minimax and Zippo in China, Celonis and Helsing in Europe, Databricks and Canva. So is 2026 the first truly global tech IPO year? That's one. And what is driving this convergence across, well, let's say, so many borders all at once?
It is true. The last year, actually, the biggest stock market gains were in Europe and in East Asia.
Hmm.
Okay, it's Korea, China, Indonesia, and all on the East Asia, and in Europe. Europe is now getting almost getting a third of the private capital, and there are also a lot of companies are going IPO. China is also coming back, of course, after 5, 10 years of sluggishness.
Hmm.
Before it's not
Hmm.
like India. I felt, I mean, last year we didn't, our stock market didn't do well. It's a hardly 2 to 3%, and it started off this year again in a negative way. Right now, it's about the -2%. I think Nifty and all that right now.
Hmm. Hmm.
Um, but there are a lot of Indian companies, the startups that are coming.
Yes.
But we don't want, one thing is the public have to be careful, the retail, because you don't want like a Paytm type, heavy, high valuation, and then ultimately the retail investors got burnt,
Right.
because
Right.
for, we have to be careful on how these valuations are. Really, are these companies really worth what the market capitalization is? For a
I
lot
guess
of things
that
are there.
should be the narrative across the globe, don't you not think so? I mean,
Absolutely,
as you
absolutely.
mentioned about Nvidia, to be honest, or sorry, you mentioned about OpenAI earlier. So I guess that should be something which should be as part of the overall sense of being, informed and measured in decision making before taking this step.
Absolutely, and OpenAI is the biggest dark horse I feel,
Mm,
because its valuation is so high. I don't know whether they will ever get the returns, even if they go to $100 billion revenue return rate of return in a couple
mm,
of years. Right now, they're at about 50-60 billion dollar annual revenue rate. Even if they go to 100 billion, can they really give back
yeah,
the
yeah,
returns? Therefore, ROI for OpenAI is
sure.
questionable, and like that, I am not familiar with the European and East Asian companies. I'm only
Okay.
familiar with the US and Indian companies, and
Mm-hmm.
we both here in both these sectors. Yeah, the retail investors have to be a little, cautious about investing. For example, Tesla is still quite high. If someone, I wouldn't want to touch Tesla today at this rate right now.
Despite the Optimus announcement and all that.
The Optimus is there, but the Optimus is, Boston there are many companies, Agility Robotics, Boston Dynamics, many companies are showing up. Therefore, it's not, I don't know whether, but does it deserve a 400 PE? That's the question,
Okay.
Yeah, it may deserve a 50 PE or a 60 PE, but not a 400 PE in my opinion.
And that's an important question to have asked everyone. In conclusion, Ramesh, I'd like to check with you as we wrap this up. If public markets are for funding civilization scale infrastructure, we're talking about $3 trillion, and of course, the private markets are for funding scaled innovation, which of course you don't fully agree with because you believe that that ecosystem is definitely quite strong at the moment. So, are we essentially watching a new division of labor emerge between, for example, public and private capital? How would you like to wrap it up?
Now, when you say division of labor, can you explain to me a little bit? When I didn't get that point.
No, basically, I'll just hark back to what I was trying to say. What I meant to say was, are we essentially watching a new division emerge between public and private capital?
Yeah, absolutely, absolutely. I think there will be a lot of private companies that will still be in private. There will be some public companies, some companies that will go public for two reasons, mainly for branding, global branding, and for heavy infrastructure like SpaceX and all that, and
Right.
OpenAI and all that. But otherwise, I feel the private capital will be very strong. Number one, you are not. I'm talking about from the U.S. point.
That's your
The
prediction for
Sarbanes,
2026? Is that what you're
there will
saying?
be, yeah, but there will be, yes. I don't think there will be a growth in the IPOs in 2026, but because of the current administration's policies of, less regulation, but still you are governed by the SOX, like the Sarbanes-Oxley Act. You are governed by, a lot of, regulatory thing that you have to disclose every quarter, every,
Sure.
half yearly. So I don't think it will be like a big boom. It will be
Mm-hmm.
a constant growth, about 10 to 20% more IPOs this year.
Mm-hmm.
But it won't be like private capital will still be ruling, I feel, because it won't be a complete shift from private, and private capital will still grow because a lot of people, and as I said, a lot of pension funds across the world are also putting into this, funding the private capital. You know.
Fair enough. Well, Ramesh, thank you as always. It's been a true pleasure. And every time you join us on front page, you definitely give us some very interesting aspects to chew on and absorb on and think about. And of course, then we bring you back again because, well, we've run out of whatever you had enthralled us the previous time. So, well, we are looking forward to our next conversation. But till then, as always, we thank you from Front Page. Ladies and gentlemen, there you have it. Ramesh put it across, well, very simply. He said that, well, private capital is bold, it's strong, and it is going to continue to grow in the year 2026. IPOs are going to grow 10 to 20%, but a lot of it also he mentioned was, well, brand building. Maybe it's optics. Maybe it has those factors. And then finally, I believe the one thing that Ramesh believes that we need to follow, not just in India but globally, is to be very, very well informed and understand things fairly deeply before we go ahead and invest. But all you need to do is for sure keep investing in, yes, Front Page on the AIM network by liking, sharing, and subscribing. And as always, I will leave you with this gem of a thought. Think AI, think AIM.